Welcome to the video that I call the deep dive, and for lack of a better word, this could also be called a potpourri of the different charts. Each week I post daily charts. Of course, those are usually posted every day. I also have weekly charts or weekly video that I post, and then I also have an intermarket analysis video that I post. Well, especially with the daily charts, I'm only showing those charts that really tell us something at this time. So what I do is at the end of every week, I go back through all the charts that I look at, and this is a video just to show you where those charts are at. They may not be telling us anything, but we can still get some useful information from them. So this is being prepared for Tuesday, January 17th. The market will be closed on Monday, January 16th. First of all, just looking at how things performed on Friday, we had a pretty solid week. It was a good up day. It was a good up week. And we saw where growth did outperform value on Friday in the large cap, as well as the mid cap, and it really outperformed more in the small cap. We're seeing a lot of growth coming into the mid caps and small caps right now, which could give some real support to the S&P 500. But we're also hitting some pretty significant upward resistance right now. We have a downward sloping trend line that we're just about ready to bump into. We're above the 200-day moving average, but we have some significant resistance even above that trend line, and the market is starting to get into a short to an even little bit intermediate term overbought condition. So we need to be just careful of that before we switch to full-blown positive. Here's the VIX, which has been acting kind of strange. It hasn't been going up as the market was going down. And in fact, when it goes up, it has been going down in value. And so we've been seeing a real decline, both on the line chart and on the bar chart. But there are the static numbers that apply to the VIX, but we also want to look at what are the ranges doing over a period of time. And we're just starting to hit more of a lower range now in the VIX. Also, this is a VIX of the VIX. This measures how the VIX is either going up or down. It's actually been increasing a little bit on the bar chart as well as on the line chart. Another thing that I show is when the VIX gets really moving up or down, are we starting to get overextended either to the upside or the downside? Well, we're pretty much in the middle. Even though it's been declining, as the VIX has been declining, we're not given an extreme reading right now. We're down 17.01% going back to the all-time high. Sorry about that. I only have to start coughing when I begin recording. As far as support and resistance, the Ichimoku cloud, this held up pretty well. We were going right in between the red cloud and the green cloud, and then we've been bouncing up out of that. If we start to fall, we'll want to see, can that support level hold, or are we going to shift and go more positive with the overall cloud? We're just a little bit above the midpoint in our trend channel, and so that's tilting things a little bit more positive. As far as the technical alerts, this is just as of Friday, and we read this from the bottom up, where in Canada, they had a bullish 50-20 moving average crossover. We call that a golden cross. There were some negative signs where the NASDAQ was bouncing around earlier in the day, as well as the Dow. We opened lower on Friday, but then really started to bounce back. The one important thing was the S&P 500. Even though it didn't close above 4,000, it was at 39.99. We did get above 4,000 briefly. Looking at our indexes, right now the mid caps are doing the best with a score of 79.8, the Dow at 72.5, the small caps at 71.6. Then we have the S&P, which has some making up to do at 41. And then in last place, even though it's showing some improvement, the Qs, which are the NASDAQ 100, they're giving a score of 8.6. Looking at the trend, I analyze the trend in each day's video, but I also look at this Arun. This helps to give us an idea of the upward or downward movement. We're not really seeing any changes now. This is still overall negative because we're below zero, but it's not picking up a lot of difference between the sellers, which is the red line, and the buyers, which is the green line. In the short term, this is our short-term moving average with the 10 through 50 simple moving averages. We're bouncing all around now, which is really why I haven't been showing it all that much. And the force index is looking more positive. It's green and advancing and not necessarily extreme currently. On the intermediate term, this is an indicator that I introduced last week for the first time. I kind of created this myself, but there's really no genius behind this. This is just a 20-period moving average of the open and then the high and then the low and the close. And so it plots 4 lines. When we're going up and then we see a bit of a retracement, a lot of times one of these lines will act as support. When we're going down and we bounce back up, a lot of times one of these lines will act as resistance. We're starting to break out above all 4 lines right now, so that is more positive. If we see any kind of retracement, we'll be watching these different levels. Standard deviation, this is how, are we getting too fast, too far, either to the upside or the downside? Right now, we're pretty much neutral. We had spent so much time chopping sideways, it gave this indicator a chance to get more in line with itself. And so are we deviating away from the standard or average price right now? No, we're just about at a good point based on that chart. The parabolic SAR, it continues to be positive with the dots underneath. And the summation index based on price and volume, even though I showed this a few times, I didn't show it in the video for Tuesday. So this is more positive. We're advancing and we're above 0. The mass index, we're not getting a signal being generated right now. We really only pay attention to this when it gets back up to this dashed red line and then to the blue line. The boom indicator, this is how far away do we get from the moving average. This measures a 50-period moving average, and the bottom is a 200-period moving average, and it's not giving us an extreme reading right now. In fact, it's starting to turn back more positive with the 200. So that's showing some improvement. And then the highs minus the lows, this is also showing some improvement. We're getting above 0 right now. When we really use this chart is when we get an extreme negative reading. A lot of times that will mark a bottom in the S&P. We got some low readings here, but not necessarily extreme. But the fact that this is going back up is positive. The RSI 14 and 9 shows that they're both advancing and above 50, so that's positive, and they're not getting extreme positive, at least yet. And then the double and triple exponential moving averages, I was looking at these for quite a while as this was acting as overhead resistance, but we're now starting to turn back up. This long red line here is an anchored moving average going back to the COVID low back in March 2020. So we're above that now, and we're above both of these moving averages, and both moving averages are starting to turn back up. So that is more positive. Connor's RSI, looking positive because we're near the top, but not giving us an extreme reading. And then here's our intermediate term rainbow, where we're starting to come back up the other side. If we can stay above this, we'll start to see all the moving averages turn back up. Chaikin oscillator, above the midpoint and advancing and not necessarily extreme, so that's positive. Chaikin money flow also showing some positive action here. And the volume, which dropped off a bit on Friday, it has been picking up, but we still, since we're below this midpoint here, we tend to be below average quite a bit. The vortex is still looking strong with the green line advancing and the red line declining. And the ease of movement, not really seeing anything in the 1 period. That's when we look at the big moves from one day to the next. What I look at more is the 14 period, and it is above the midpoint and advancing. Ultimate oscillator, also above the midpoint and advancing. Money flow index, looking more positive. Our different charts, Heikin Ashi, starting to give us a lot of open candles, so this is more positive. The Kegi chart is black and advancing, so that's positive. The Renko chart just added an open block here, so that's positive. And the 3-line break is also giving us open bars as well. That's more positive. Our trading system's kind of in neutral land here with the go, no-go system, kind of getting a brown color in here. It's a little bit confused about what's happening right now. Some of the longer-term charts, here's the longer-term rainbow, where these are still declining overall, and we're starting to slice our way back through this. If we can continue and then get above this, we'll start to see these lines turn back up. The weekly chart, we're still above this 38.2% retracement. We're well above that now, and we're also above this 200-week moving average. And I already showed the trend channel once. I guess that must be an important chart. And then the Vixen, which is the VIX on the NASDAQ 100, it has also been really declining. This is a pretty strange looking chart. It looks like there's icicles falling here. But it just shows how the volatility, both for the VIX and the Vixen, have been declining. And then the rule of thumb is when the VIX is high, it's time to buy. When it's low, it's time to go. Well, it's starting to get pretty low now, but it could go a lot lower than what we're seeing. As far as bonds, we still have a number of yield curves that are inverted. The 10-year to the 5-year remains inverted. The 30 to the 5-year is just barely positive now. So this is no longer inverted currently. It's not a real big deal here. There's other yield curves that we look at that are more important, but this had been inverted for some time and has now switched back. This is an important one. The 10 to the 2-year, this is what a lot of economists use. As this continues to decline, this is suggesting economic weakness. And then those that don't use the 10 to the 2-year, they might use the 10 to the 3-month. This is also really continuing to decline, suggesting that 2023 is going to have some difficult economic times. Some rate of change charts just to show you, we're just about at the midpoint, going back 20 periods, 50 periods a little above the midpoint, so that's slightly positive. 200 periods where we did get an extreme negative reading back in October, showing not much of an improvement, but a little bit. And then 250 periods after coming down quite a bit. See, then I have another one, and it's starting to show a little bit of a bounce right now. Then our possible positive scenarios, I haven't been able to talk about those for a long time, but I started talking more about them in the daily videos this week, where this is one of them, where the stocks that are above the 200-day simple moving average didn't really give us a real extreme negative reading, but it is showing some improvement, and here's the current reading right now. So I'm not really sure if we can call this a real valid signal. We want to see a real washout in price when the S&P is really making a significant downward move, and it just hasn't been doing that as we were chopping sideways. The same thing can be true with the stocks above their 50-period moving average. We did have an extreme negative reading here back in December and possibly even back into November. It's a little hard to see. We came all the way up to this positive line, dropped back, and now we're starting to show some improvement. That's why I haven't been showing these, because we're not really working off of a signal per se. And then this is the mid cap showing how they've been improving, and kind of the same story, and with the small caps showing improvement, but not really coming off of an extreme reading. The 10-day average of the highs and the lows in the S&P didn't really give us a recent extreme negative move, but we are seeing some improvement here. And then the 5-day period moving average, looking at the Amex, NASDAQ, and NYSE, showing some improvement here, but we're not really coming off of a real extreme negative reading. So thank you. I hope this was helpful to you, and you use these in conjunction with the other videos that I post. If you have any questions, feel free to always leave a comment or send me an email. And if I don't hear from you, I will talk to you in the next video.